Hello, everybody. Welcome to this month's Agent Advantage webinar. My name is Kurt Klaus. Thanks for being with us today. These monthly webinars are brought to you by the entire Guarantee Rate family of companies and our Agent Advantage website. This month's webinar topic is understanding buydowns. Before we get started, if you are on the call and you are not familiar with what Agent Advantage is, it is our no-cost proprietary website, and it contains tech and tools and entire marketing system and a CRM and a loan status, way to connect with your loan officer and co-market with them. You can go to agents.rate.com for Agent Advantage. There's a version for each company: Guarantee Rate Affinity, Proper Rate, Certainty. We also have an Agent Advantage Insider Facebook page. This is the closed group. This will tell you everything that we have going on at Agent Advantage, when the next webinar is, any new tech that's being released. You can click that little QR code there if you want to request to join. Again, that's a closed group. It's our little forum of agents. I think we have around 4,000 agents part of that group, but please feel free to join our insider group. And again, today's topic is understanding buy downs. I'm sure a lot of you, the agents on this call, have heard about buy down program, but not knowing how many you have actually used them. We want to go through and help you get a better understanding of what buy downs are and how you can allow your buyers to lower their interest rate for a set period of time or even for the entire loan. And we want to go through the specific benefits to you, the real estate agent, and to your buyers. So we'll cover what buy downs are, how they can help you and your home buyers, and go through some scenarios too. So to cover this interesting topic, we have brought in our product expert here at Guaranteed Rate, Kate Amor, who is, again, hi Kate, thank you so much for being a part of this. There's her bio there. She has a background in banking, product development, position with Fifth Third in their mortgages and too. So tons of experience with product, and there's no one better to talk about buy downs than Kate. So we appreciate you being on, Kate. I will turn it over to you, and please ask questions. So everyone on the call, we love your questions. Put them in the chat in the go-to, and we'll try to save a couple minutes at the very end of this webinar to get to all your questions. So again, hi Kate, how you doing?
Hey everyone, I am thrilled to be here today and talking about my favorite thing, which is products, and of course supporting our Guaranteed Rate companies on things that are absolutely amazing and going to make a big difference for you and your business. So let's go into that agenda and talk about what we're going to be doing here next. So today we're going to be covering off on our buy downs. And I'm going to tell you, everyone, this is an amazing strategy for this market. I honestly can't think of a better time than now to be thinking about buy downs. And so today we're going to cover what are buy downs, how do they benefit you, and then what are the different programs that we have available at all of our companies to help you do what you do best, and that is to sell more homes. So let's go ahead and move next to our description of these different topics. So what are buy downs? Well, I'm going to tell everyone, there's a secret. There are two kinds of buy downs, two kinds. And there are two ways to sell them. So a buy down is a simple way to lower the rate for either the entire loan term or it's going to be for a set period of time. And we call those either permanent or temporary. Pretty straightforward, right? So the permanent buy down is just what it sounds like. you're going to pay some discount points, and we're going to lower the rate for the life of the loan. So that means it's yours forever to have, to hold, and to cherish. And then we have a temporary buy down. And a temporary buy down is just another great option to give the seller or the lender the ability to select a specific period time to have lower initial payments. And this is what we call a temporary buy down because it's for a set period of time. You don't have it forever. Now, if that sounds confusing, don't worry. We're going to get into this and explain to you how these work. Now, once you've decided if you want a temporary or a permanent, and we will talk about the amazing ways in which both of those function and the benefits of either, there are two ways to sell them. So you can either sell the buy down at before you find a borrower. And so that's basically when the seller is going to agree to pay discount points and secure a buy down or a rate, a below market rate that you can advertise before you even know who's going to buy the property, right? So at the time of listing, we're going to go ahead and we're going to get a rate lock for you, and you're going to make that decision then. Or you can wait. If that sounds complicated, don't worry. You can wait, and we can do it at the time that we are negotiating a contract between the buyer and the seller. And all parties can agree at that point, and we just negotiate a seller's concession. So buy downs really are that simple. Two kinds of buy downs, permanent and temporary, two ways to sell them at the time of property listing or when you're negotiating the contract. So let's go next. Let's talk about agents. Why would you want to do a buy down? Well, it's a competitive advantage. Offering a buy down definitely makes the property more attractive. It gives you a competitive edge. And it allows you to compliantly market below market rates on your listings. If you see somebody who has below market rates, this is a compliant way of doing that so that we all make sure that we are doing what makes sense. Now, what else is the benefit? Well, you get faster sales. Absolutely can help reduce time on the market. So if you have some properties that have been sitting for a while, they're not necessarily moving, which can be common this time of year. We absolutely have the solution for you on this. And if you have a pattern and practice of moving listings quickly, it's going to increase your listings. It can result in higher commissions, and it creates adaptability. So no matter what market conditions we're moving in and out of, you have the options you need in order to help move properties. This is just an amazing opportunity. So let's move to the next slide. Why would a home buyer want this? So I get why it's for you as a realtor. This makes so much sense, right? For our agents, we have amazing options. But what's in it for the home buyer? Well, it's going to lower initial payments, or it could lower payments permanently, depending on which options you choose. It's amazing for budgeting. Home buyers can better budget their finances with lower initial payments or permanent payments. And it really can help with affordability. We all know that interest rates being higher, we've seen inflation, there is less inventory on the market, and so those properties may be going for more. These are all ways that help get more buyers into homes and helps with the sticker shock of the reality of how much a mortgage payment is right now. The other amazing benefit here is it's an interest rate hedge. So with interest rates moving all over the place, this can really provide protection against higher future interest rates. And of course, financial relief, because if you are saving money on your monthly payment, that is a huge win for you. Clearly, like you can pay to maybe make other improvements on the property or invest your money in other ways. So there are definite financial advantages to using this program. Next. All right, so let's talk about the first program, and that is RateReduce Sell. I absolutely love this program. This is the one where you're able to offer it when you're listing the property. So let's move next and get into what is RateReduce Sell. This is a great program. This is a permanent buy down. So I know we were talking about temporary and permanent. This one is a permanent buy down. And the seller is basically agreeing to an upfront fee for us to secure an interest rate for you that may be discounted between 2 to 9% of the loan amount. And the reduced rate will be transferred to the buyer upon application and when a purchase contract is signed. And this is going to allow you to protect the rate from market volatility while the seller is searching for a buyer. So if you want to be able to advertise a 5% interest rate, for example, you're going to be able to secure that, advertise it, and then transfer that over to the buyer once you have them under contract. So let's move on and let's talk about in the next slide a little bit more detail on what's in it for you. So RateReduce Sell allows the seller to advertise the home at a discounted rate. As you can see, our beautiful 5 handle on our for sale. So it's easy for you to market, advertise, and sell it. You've negotiated this rate up front. Really simple. It's already there. We're going to be able to transfer it over to your property buyer if you're working with one of our companies. And it's allowing you to have a more attractive rate and an upfront negotiation for a faster sale. Like there's no nonsense. You're able to just take that amazing 5% rate and transfer that rate over to your buyer. And the real benefit here, let's be real, it's being able to advertise it. Being able to advertise it, and you're taking all the headache out of the transaction when it comes to talking about rates and how you secure that. So it's a really nice feature in the right scenario. So let's move to the next slide and talk about how it's as easy as 1, 2, 3. So how do I get this? Real simple. You're going to reach out to your loan officer from a guaranteed rate company, and you're going to work with your loan officer to secure the discounted rate. And then it's going to be that simple. You're just going to be able to go out and promote that discounted rate at your open houses, on the MLS, in social media, anywhere that you're creating marketing material or reaching out to different potential prospective buyers, you're going to be able to promote this. So that right there is an amazing advantage. So let's move on to the next place. Let's talk about like this program and how you can use it. So currently we're offering this on our conforming loan programs. So obviously it's going to have to meet those eligibility requirements in order to secure that rate lock up front. And I want to remind everyone, this is actually a rate lock. So once you secure that 5% rate, there's a lot of people that go out there and advertise discounted rates, but they're not tied to an actual rate lock. This is an actual rate lock. We do actually have this reserved for your particular buyer. So keep that in mind. We're going to offer it on conforming and high balance. And so for $995, you're going to be able to secure that up ahead of time. And that upfront fee is going to be refunded to the seller when the loan closes with one of our companies. So it is refundable when the loan closes, but if it doesn't close, it is going to be paying for that lock. So the seller is going to be able to choose between a 2 to 9% in discount points, and that's going to be based, of course, eligibility applies on this because there are limits on discount points depending on the programs. We're going to be able to lock in that pricing for you for 90 days. And we have, generally speaking, the pricing that we're going to quote to you is going to be for a 760 FICO primary res at 80% LTV. If somebody chooses a scenario outside of this, we'll be able to adjust it for the pricing at that time that you made that lock. So we're going to make sure that your buyer gets the best pricing available. And then the seller has 30 days from the time you get them under contract in order to get that loan closed. So we are super excited about being able to offer this and looking forward to moving to that next slide so we can continue to show you why you should do this. So how it works, I have two different scenarios for you. I have a listing price at $350,000 for my middle Americans, and then I have a high balance scenario that we'll cover next. And I often get a lot of people that say, well, why would I choose this over a 5% price reduction? I mean, clearly the 5% price reduction has to be better for my client. And I would say to you that a 5% price reduction at 20% down is $66,000 on this deal. That's how much the reduction is going to cost. A 5% buy down costs only $14,000. That's right, only $14,000. And it's gonna save the borrower $318 a month. Even if they just went with a 2% buy down for $5,600, that is still $185 a month. And this is forever, always. They will have it forever and ever and ever. Versus that 5% buy down, that 5% price reduction is only $94. It is a huge benefit. That's like, that could be your electric payment. I mean, seriously, it could be. So I think a lot of people don't realize how beneficial a buy down is for the borrower. Let's go and look at a high balance example because you will see why this gets even better. All right, here we have a high balance example. And as you can see, the 5% reduction is going to be $237,000. $237, but for a $40,000 seller concession, I can get a 5% buy down, and now I am saving my borrower $1,300 a month. I mean, you know, that's meaningful. That is meaningful. Even at 2%, it is, you know, $757. So I want to remind everyone that dollar for dollar on the spend, a buy down can make a lot of sense depending on the buyer, the scenario, what you're looking at, the market. But buy downs are an amazing way to just really help people adjust to what's been going on with interest rate movement in the market. And I think this example says it all when we talk about what the benefits are. So let's go ahead on to the next slide. And why? Why do this? Well, we're going to be able to secure the rate for 60 days. And I want to remind everyone, this is for the buy down before you have a buyer in hand. So you're securing this ahead of time. So you have 60 days with that rate. You're going to be able to take advantage of all of our co-branded marketing materials. So we've made it easy for you to market it. It's an easy way to get the home off the market quickly. It's an alternative to having to continually renegotiate listings with the seller. It allows you 30 days to find a buyer, and the upfront fee is going to be refunded when the loan closes. And this is a really great compliant way to market this. Now, buyer benefits. You've already secured it. You've already done the work on this. It's just easy. You're going to just transfer it right over to the buyer of your property, and you're going to have 30 days to close that loan. And with our companies and technologies, you will get access to same-day mortgage. And I have to tell you, like, we just regularly slam dunk these deals and get them done so quickly that that's going to be more than enough time. All right, so this is our RateReduce Sell program because it's designed to help our agents sell properties faster and move properties that have maybe been sitting on the market for a while. Let's talk about what other buy down options we have and move on to our next portion of the presentation. Oh, before I go, marketing. All of the different cool marketing that I was talking about, I want to make sure that everybody sees this. We have it where you're able to put the co-branded marketing with your listing. You're able to put the rate on here. We also have social media pieces. We have NMLS flyers that you can just attach in the NMLS. We have all types of amazing opportunities for you to do co-branded marketing with us. So that we've made it really easy, simple, and you'll be able to put that out. So super excited about that. All right, let's talk about the most common buy down that we have today, and that is rate reduce perm. So this is a permanent buy down. This is by far, we do the most of these. So let's move into the details here. All right, so it's a permanent buy down, and this is a program that can be used once there is a buyer for the property, and it's going to allow the seller and the buyer the ability to negotiate the terms of a permanent buy down into the purchase contract. It is super simple, straightforward, and it is a great option to select when thinking about like, hey, how can I sweeten this deal, get this deal closed? And it's such a benefit, like I said, to the buyer of the property. So let's move on to the next portion where we can talk about the program highlights. All right, guys, this by far is my favorite program because it can be paired with any loan type. Any loan type, multiple terms, options available. We have it all. There's no upfront fee required, and the seller can negotiate discount points they want to apply toward the permanent buy down. And this is just simple. It's just a simple seller's concession. And we're going to be able to take that and apply that toward a buy down. And the buyer has the flexibility to choose when they want to lock in that rate. Now, remember, with rate reduce sell, we're locking it in at the time that you're listing that property or for a property that's already listed. But here, you can just negotiate that in the contract, and we're going to be able to lock in their rate whenever they want, and the buyer has that flexibility. And the buyer can choose to switch products based on eligibility without impacting the buy down. So there's just ultimate flexibility. There's really no limits with this program outside of where it fits within the rate stack. So it is a great option for people who are like, I don't know if I want it up front, but at the time of contract, it's a beautiful thing. So permanent buy downs are a great option, and I highly recommend we look at it. So let's move on to the next slide. Let's talk about the temporary option. Okay, so I know everyone's like, all right, let's get into this temporary idea. Like, why would I use a temporary option? So let's talk about what a temporary one is. All right, so basically a temporary buy down is where a borrower has opted to choose to have a reduced rate for a period of time. And this is really a conversation that has to happen between the loan officer and the potential buyer of the property. So as an agent, you don't have to necessarily worry about whether we choose a permanent or a temporary. That's really going to be a conversation that happens with our loan officer and the buyer themselves. But I want to talk about this for you so you can understand the benefits of it. And really, it may make sense for people. And the reason it might make sense is because someone's like, hey, I'm only going to live in this house for a couple of years. I'm going to be out of here in 3 years. I'm going to be moving to a new area. Maybe they're a veteran who is moving to different places and spaces, and they're going to get relocated, or it's an executive who's moving around from different places, or they know that maybe they're going to be growing their family and looking to get a bigger property, or they have a very firm opinion about where interest rates are going, and they believe that interest rates are going to move up, down, here or there, and they're very opinionated about it, and they don't want to have a permanent buy down because they don't believe they're going to be in that loan for more than 3 years. And so that's a very unique situation that's going to be applicable to different customer types. And our job here is to make sure that we're giving people all the different selections they need to make custom loan solutions for our customers. It's not about telling people what to do. It's about creating custom solutions so that you are able to put your best foot forward and make sure that we are really serving the needs for all of the different customers that may come through. So What a temporary buy down does is we take the buy down money and put it in an escrow account at closing, and then the funds are dispersed to pay the difference in the rate, which creates the effect of lowering the borrower's monthly payment for this initial period. And I will also say that sometimes temporary buy downs can cost differently than a permanent buy down. So there may be other reasons people would want to choose this temporary feature. But as we said, you can choose either the permanent, temporary, or you can choose to do it before you even have a borrower. And all of these options are great. All right, so let's talk about how the program is different on the next slide. So as you can see with temporary buy downs, there are subtle differences in eligibility, where the permanent buy down was wide open and you could go anywhere and use it with anything on anyone. A temporary buy down, because it is a graduated payment buy down, is different. So in this instance, you're going to notice we offer this on our Fannie and Freddie conforming. We offer it on FHA, VA, and USDA. We even have it on high balance. And then on top of it, we have many different jumbo and non-QM options available. We have it on multiple different terms. Typically, it's going to be a fully amortizing term. And then we have it on LTVs up to 97%. We do limit this to purchases, and you can use it for new construction or existing homes. We do like the property to be owner occupied. And this is where it differs from buy downs. People are sometimes like, oh, I heard about temporary buy downs from back in the day, and they created issues in the market. And these are not those temporary buy downs, because we qualify the borrower at the full note rate. So keep in mind that buy downs have really come a long way from the long time ago when they first came around. And buy downs today are, much more responsible, make sense, and we definitely want to be able to offer them for people who may not be in a property as long. Now, we do offer this on a wide range of programs, our SFRs, PUDs, condos, 2 to 4 units, and co-ops. So we definitely make sure that we're serving a wide customer base with it. So let's move to the next slide and look through some scenarios. So we have many options in the temporary buy down family. I'm going to just show you the most popular. So the most popular is our 3-2-1, our 2-1, the 1-0, and then we have a 1.5 to 5.5, because we're extra like that and just want to make sure you have options depending on what you've negotiated. So how does the temporary buy down work? Basically, it's going, let's just use the 3-2-1 as a quick example. So on year number 1, the payment is going to be like the interest rate is 3% lower. So let's say, I'm just going to use round numbers here, that we have a 6% note rate on this deal. It's going to be a 3% mortgage payment. So they're going to feel the borrower is going to make a payment like it's only 3%. And then on year 2, it's going to be 4%. And then on year 3, it's going to be 5%. Right? And then we just repeat this based on the iteration selected for the underlying program and its eligibility. All right. And so you're just going to apply that logic to all of these different products and programs. And for a temporary buy down, you can see here that at like a 6.5, it's going to be about 4.5. So there's just a variety of different selections, and that's why it would matter, right? So you have the 3-2-1, since it's got the biggest savings, it's going to cost the most because we're going to keep the most money in escrow, right? And then for the 2-1, you can see it's going to be about 2.3. And then let's just say you were going to use half of your seller concession towards some fees and the rest of it toward a buy down. You have another 1.5 left. Then you're going to be able to do our 1.5 half. So we just want to make sure you have lots of different options depending on if this is the right opportunity for you and how long you think that the particular buyer is going to be in that property. Because we do have people that move around more frequently, and this is an obvious make sense solution for them. So let's go ahead and move on to the next slide and look at some examples. So in this example, we're going to do a 2-1 buy down, and the seller contribution to this is going to be $6,600. And as you can see here, again, same example, you could do the 5% price reduction, which is, $66,000 out of the transaction, or we could do this 6,600 above and do a 2-1 buy down, of which the buyer gets a real benefit here. It's, $660 for the first year, and then for the second year, it's going to be about $185. So there are absolutely places and spaces where this makes sense. Now let's look at our high balance example on the next slide, because it's even more. So I want to remind everyone that in this example, that 5% contribution is $237,000 for that 5% price reduction, or we're able to, again, do a 2-1 buy down. And as you can see, it's $1,300 for the first year, and then $674 the second year. And so, I mean, these are meaningful differences in payments. And I want to remind everyone, you could choose this, or you could choose that permanent buy down in this exact same scenario, which, was close to, which was double the temporary buy down solution, but it was permanent, and they had that 1,300 forever to love and to cherish, right? And so it's really going to come down to consultative sales approach with one of our industry expert loan officers to understand which one of these scenarios makes more sense based on what that particular buyer needs and what makes more sense, right? And so then, in addition to this, let's move to the next slide. We have amazing marketing opportunities for this as well, right? We have items we can use at your custom open house. We can offer many different flyers in order to support this. And this is just another way that we make it really easy for you to do business with us and to talk about it. So in summary, I want to remind everyone, there are two kinds of buy downs, permanent and temporary, and there's two ways to sell them. We can sell them at the time we're listing the property, or at the time it goes under contract. And if you don't know which one to use, don't worry about it. That is for the loan officer to work with you and one of our experts in order to guide the right scenario for that particular buyer's needs. Kurt, I'm so excited to have had this opportunity to talk about buy downs and how they can next level your business.
Kate, thank you so much. Wealth of knowledge, great presentation. Tons of questions, and everyone who asked a question, I promise that if we don't answer them right now, we will send you a written, we'll email you back and get your answers to you. So we've got a couple for you, Kate. Can we offer buy downs to all of their clients, depending on how they qualify, depending on their credit score?
Yes, that's right. We can offer buy downs to all of our clients. A permanent buy down is available in the widest variety of scenarios, and then in more limited circumstances, we are able to offer temporary buy downs.
Very good. And what happens with the buy down funds if you're using a temporary buy down, if the loan is paid off prior to using all those funds?
That is a beautiful question. And because it's an escrow, those funds come back into the transaction at the time that loan is paid off. So a permanent buy down, the funds are gone. In a temporary buy down, if that loan is paid off, those funds are applied back to the transaction, which is nice. It's a nice benefit.
Sure is. Thanks. Bunch on collateral. Do you have, one pagers? Yeah, we have tons of marketing materials on this. Get with your loan officer for different options. Let me see if I can get a couple more to you, Kate. Is 30-day close in addition to the 60 days for the lock?
So right now we have 30 days to find the buyer and we have 30 days to get the loan closed. If we have a loan that runs over a day or two here or there, we will always work with you in order to make sure that we are able to honor our locks.
Very good. Yeah, another kind of follow-up here. It says, can that period be extended in case it doesn't close in that 60 days?
Yep, we always have opportunities to work with rate extensions to make sure that we are able to get loans closed for our borrowers.
Very good. Thanks, Kate. Some specific ones in here. Lots saying thank you, thank you. Lots asking if we will have this presentation. This will be recorded, and all of our webinars are archived and available on the Agent Advantage website. Even without logging in, go to the coaching tab, go to webinars. As soon as we render this one, this webinar in its recorded entirety with Kate will be placed on Agent Advantage. You can go and watch it there anytime. And if there is nothing else, Kate, I want to thank you again for the perfect presentation on how, especially with the today's market, how you, the realtor, can sell more homes, help more buyers, and take advantage of the amazing buy down programs.
Thank you so much for having me. Such a pleasure to be here.
Thanks everyone for joining. Again, there's our email, agents@rate.com. We would love to hear from you with your feedback and any other questions about the webinar. But thanks for being with us today. Have a great rest of your day, and here's to a great 2024.